Well, hello there, everyone. Hopefully, you're doing outstanding on this Manic Monday. What? Manic Monday? Nah, that's a song, isn't it? By the Bangles. Anyway, the times they are changing. Oh, wait, that's another song by Bob Dylan. I think he sang it back in 1963, which was before I was born. But many of you, even if you don't realize it, probably have heard the lyrics, the song somewhere in the past. The times they are changing by Bob Dylan. Check it out if you haven't with your whatever device you stream music on. Anyway, with that being said, I'm going to talk about two topics today. I'm going to combine one into the other. I'll tell you real quick and get into my normal little spiel. I'm going to talk about how you set goals, short term, medium, long term, in today's economic uncertain condition that we are all beginning to experience, even if you do not realize what we're experiencing. Stick around to the end, and I will try to articulate the best I can what is happening, what's going on, and the unknown that no one can accurately predict of what we will be experiencing. And in the midst of all of that, how do we as individual investors succeed to build our own wealth so we can survive anything that happens in the future? Okay? That's the goal of what I'm going to try to help you with. Stick around to the end. I'm not always the best at articulating everything I want to say, but I will do my best to explain everything to you. Okay? So with that being said, I am Mazske Finance. As always, please like my videos, please comment, please share them. Please subscribe. I love subscribers. We're almost at a milestone of 500 subscribers. Can you put me to and over that milestone? That's my short-term goal, okay? So once again, I am not a financial advisor. I'm not a CPA. I am not an attorney. I read a lot of stuff. I watch a variety of different YouTube videos. I read blogs, I read articles, I read emails, I read magazines, I read books, etc., etc., etc. I take everything in and try to spit it, regurgitate it, and spit it back out the best I can. Okay, so that being said, we'll start with goals. I don't know who you are. I don't know where you're at in your investing journey. You might be a brand new beginner investor. All right, so we'll start with you, and I'm going to try to run through this fairly quickly. If you are a brand new wannabe investor, all right, we all were brand new at one point. I was too. You set small goals. Don't reach for the stars when you're just beginning. Don't have a goal of 10xing your wealth when you're just beginning. Start small. If you have nothing, if you have a negative net worth, pay off debt, build your credit, but set a small goal. Maybe you need to set a goal of saving $500. If you get it, and I'm going to build upon this, if you get $500, set a goal of getting $1,000. If you get it, because most folks who are working, even if they have some debt, can save up $1,000, okay? I think most of you would agree with me. Once you get to $1,000, set a little bigger goal. Try to get to $5,000. I think the majority of working Americans, even if they're working at McDonald's or wherever, if they set their mind to it, it may take them time. It may take 6 months. It may take 5 years. But they can go from $1,000 to $5,000, okay? Once you do that, if you're one of those folks and you get to 5,000, or maybe this is where you're at right now, set a slightly larger goal. Try to get to 25,000, because that might seem like a big number, especially if you were trying to get that 500. But break it down smaller, build upon it, and you get to 25,000. Once you get to 25,000-ish, you can perhaps, depending on what market you invest in, branch out and buy maybe one rental property. Maybe. I'm not going to make that decision for you. Maybe you need 50,000. Okay? But once you get to 25, something I can almost guarantee that will happen for most folks, the process will speed up. You'll go faster. To get that first 25 will take longer than to get the second 25. To get to that first 50,000 will take longer than to get to the second 50,000. Building upon that, to get to that first 100,000 is going to take you longer than to get to 200,000. To get to 500,000 is going to take you longer than getting to 1,000,000. And when you get to 1,000,000, you can double it to 2,000,000. It'll take a long time, but you will get there. And then from 2 to 4 will happen in less time than 1 to 2. That's what happens. It's the power of compounding. It builds upon itself. Okay? I didn't break that down into the nuts and bolts. I've done that in other videos. I'll do it in future videos. But just real quick, when you're trying to save money, try to put it in a safe place that pays you some interest, okay? There are online banks now that are paying 3.3%. That's Wealthfront. Ally Bank, I think, is paying 2.75%. There's other banks, you can Google them, high yield savings accounts, might be paying 4%, 3.5%, 4.5%. There's CDs I see advertised from my local banks around here that you lock your money in, but they're paying 4.5%. There's one that's paying 5%, but you got to lock your money in for a 3-year period, and the interest rate will decrease over that 3 years. So that's to me, that's not good. I want the rate to go up over 3 years, not go down. Okay, but leading that into the economic uncertainty of what we're experiencing, I'm going to reference a couple different things, so I may look down periodically to do it. One, the main thing I'm referencing, I've brought this gentleman up before. I get emails from John Malden. John Malden is an economist. He's currently living in, where's he living? Brazil? No. Puerto Rico. He's living in Puerto Rico. That's what he is. He's an American. I think he's in the States right now. All right. He's actually friends with CEO of one of the companies I invest with, King Operating Company. I texted a picture of that CEO a month or two ago of John and Jay Young, who's the CEO of King Operating Corporation. They met up and I think they went to a Texas Rangers baseball game. Jay used to be a part minority owner of the Texas Rangers baseball team. So anyway, I digress. Alrighty. I'm going to try to articulate the best I can the economy. Look into how it's been, looking ahead, okay? We'll say roughly the last 25 years prior to now. So, I don't know, we'll just generalize, I don't know what year that would be, the late 90s, okay? The economy was characterized by kind of 3 big things. I'm reading from John Malden's email here. 3 big things. He says hyper-globalization as Western companies aggressively moved manufacturing overseas. That's been happening since before the 90s. Okay, that's going back to the 70s, I think. U.S. manufacturers started moving out aggressively. The missus once worked at a clothing factory in Southwest Virginia, long time ago, 25 years ago. And that factory since, I think while we're still living there, we spent a year living in that area, that factory closed down and went south of the border somewhere to lower labor costs. Okay, a lot of companies have done that. Manufacturing used to be big in this country. It's no longer big. Okay, so that's just an example. We had slow GDP growth, which got slower as public and private debt burdens grew. But we also had abundant liquidity as central banks tried to stimulate growth via low rates and quantitative easing. Interest rates, I did a public speaking college class. I did a talk back around I was in Puerto Rico at the time, 1991-ish maybe, where I was referencing mortgage rates from the late 80s in that paper presentation. And I brought up mortgage rates that were like 11, 12, 13, 14%. Okay. Rates have been declining ever since then. They went down effectively almost to zero, almost like 2% or something, which is unheard of in historic rates, okay? Now rates are starting to go back up, okay? Because quantitative easing, the government was putting money into buying treasuries, I think it was, but cash, putting money into the system. There was also the money that was paid out during the COVID shutdown to every American almost that had worked a job. More money into the system, more money into the system, more money into the system, okay? That's done a couple things. It's shot inflation up. Go figure. Who would know? You put free money into the system, that causes inflation? Yeah, right. This is our government. This is our Fed. They knew what they were doing. I don't know why they did this, but they knew what they were doing. All right. Everyone knew what they were doing could not last indefinitely. But since 2020, there's been events that have happened to reverse all 3 of those things at the same time. So now we have 3 new paradigms. Okay, paradigms. We have shorter, more reliable supply chains. Remember, the supply chain was majorly disrupted during the shutdown. Now we have shorter, more reliable supply chains. We have even slower GDP growth, and we have tighter credit amid higher inflation. If you try to get a mortgage right now, it's tighter. Okay, if you try to get a loan, it's tighter, and it might get tighter, more tight. And we still have high inflation. Sure, you see headlines maybe, oh, inflation dropped. It's still high inflation. All right, the Fed wants to get the inflation down. The only way to get it down, I think, is to keep raising rates. But they don't want to keep raising rates because they don't want to put us into a recession. But odds are a recession is coming. How that will impact you, I don't know. If you're a tech worker, I think it's going to impact you more. It might be impacting you right now. Okay, not everyone's a tech worker, so I don't know how it will impact you wherever you're at. But now let me scroll back up, so I apologize for this. That's the 3 paradigm shifts. All right. I'm trying to find something else here real quick. But there's other things coming. Let me find this guy. I will find him. Muhammad. That's a name. I got to scroll up to where this starts. Sorry about this. Bear with me. Alrighty. Oh my, this is a long email. Okay. Muhammad El Idrian. I'll probably say that with a Spanish way, but he's the head of PIMCO. He was the head of PIMCO. He's now the president of Queen's College at Cambridge University. All right. He's another economist type guy. John Malden knows him. And he says, Muhammad isn't a person who will exaggerate. He's not a perma bear, someone who's always a bear about the economy. That's not him. Okay. He titled an article in Foreign Affairs called Not Just Another Recession. Not just another recession. All right. What he says is the normal business cycle that we have all been experiencing for the last umpteen decades is getting disrupted. It's not going to play out like it has in the past. One sentence here, he says, but rather than one turn of the economic wheel, the world may be experiencing major structural and secular changes that will outlast the current business cycle. There's new trends that are starting to happen. There's new shifts that are happening. And they are likely to drive even more uncertainty in the future as shocks grow more frequent and more violent. All right. When we think about that, if he says to drive even more uncertainty in the future as shocks grow more frequent and more violent, I was a stock investor for 30 some years. Okay. I started in 1990 and I still got a few stocks. Okay. But somewhere in the 2000s, I don't know what year it started, the daily changes, the weekly changes, they were like really started spiking and dropping more so than they used to. And it's been kind of building in a way, but in the same way, we've been on a bull run. I told this to the missus yesterday. The stock market has been on a bull run basically since 1990, okay, up to 2020. It's been a bull run. And if you are a stock investor, I was a stock investor during then. If you were a stock investor during that time period, that's what, 30 years, you could have been successful and beaten the market average. I've said this on my channel before. I've said this to my mastermind group. I'm not an expert at anything, okay? But what I see is my humble opinion. The stock market is not going to do what it's done for the last 30 some years. It's not going to do it. So if I had a lot of money in the S&P 500 fund, the total stock market index fund, me personally, I would really think strongly about pulling that money out to reallocate it a different way. If I was not going to buy real estate, I would try to, me being me, probably put my money into perhaps dividend paying stocks in hopes that these companies that are paying the dividends of 3, 4, 5, 6, 7, 8% can maintain their dividend. I would look at dividend aristocrats, companies that have increased their dividend for the last 25 years, or dividend kings, companies that have increased their dividends for the last 50 years. Even if we got rocked as a recession rocks us, even if they cut their dividend, most of these companies will not eliminate their dividend. So even if your stock price is taking those ups and downs, you can still get that cash flow. And maybe you reinvest it into buy more shares, because as you get more shares, your dividend increases. But you got to make that decision. Maybe you want the cash flow. I don't know. Okay. All right. One thing he goes on to say is that until analysts wake up to the probability that the trends we're experiencing, will outlast the next business cycle, the economic hardship they cause is likely to significantly outweigh the opportunities that they increase. Okay. He goes on to say that, talking about COVID-related supply disruptions, he says, I'm quoting Muhammad, he says, as time passed, however, it became clear that these supply chain constraints stemmed from more than just the pandemic. Certain segments of the population exited the labor force at unusually high rates. People stopped working, either by choice or necessity, making it harder for companies to find workers. The problem was compounded by disruptions in global labor flows as fewer foreign workers received visas or were willing to migrate. Faced with these and other constraints, companies began to prioritize making their operations more resilient, not just more efficient. More resilient, not just more efficient. All right, one last paragraph. Meanwhile, governments intensified their weaponization of trade, investment, and payment sanctions, a response to Russia's invasions of Ukraine and worsening tensions between the United States and China. Such changes accelerated the post-pandemic rewiring of global supply chains to aim for more friendly shoring and near-shoring. Okay. You guys want to say a little bit here, I can't say that word. What corporations are now seeking is a good idea, but it's not how they've operated for a very long time. And to make a switch of what they're doing, it will take time and money. All right. Then he throws in the Federal Reserve with what they're doing. And he says, I'm going to just chop out a little section here. And markets became conditioned to think of central banks as their best friends, always there to curtail market volatility, because that's been happening. Okay? Maybe you don't see that as a small investor, but that's been happening. Eventually, markets started to react negatively to even hints of a reduction in central bank support, effectively holding central banks hostage and preventing them from ensuring the health of the economy as a whole. If you think back to the president prior to this one, around 2018-ish or so, the Fed started raising rates a little bit, and the president, got on the Fed to stop raising rates. Presidents are not supposed to do that. That's messing with the Fed. The Fed's supposed to be an independent branch of the government, not Republican, not Democrat, just completely independent. But you got the president trying to impact the Fed, and that was wrong. That's a mistake. It's an economic mistake. Okay? But anyway, I'm moving on. All right. But you combine that with the surge in inflation in the first half of 2021. Initially, the Fed was saying this is transitory. Michael Zuber is famous on his channel saying it's not transitory. I agreed, it's not. Just everything that was happening, it's not temporary. All right. Despite mounting evidence that inflation would not go away on its own, the Fed continued to pump liquidity into the economy until March of 2022, when it finally began raising interest rates, and only modestly at first. All right. Skipping ahead a little bit, the Fed now faces a trilemma: how to reduce inflation, protect growth and jobs, and ensure financial stability. There's no easy way to do all three, especially with inflation so high. So how confident are you that the Fed can juggle those three balls without dropping at least one? Okay. Finally, Mohammed zeroes in on something we don't discuss enough. Businesses, like consumers, respond to incentives, and the incentives have changed. I'm going to skip ahead a little bit. these companies, instead of planning for one likely outcome, a baseline, companies like to have a baseline, something they can use to plan, okay? But now companies and governments have to plan for many possible outcomes. And some of these outcomes are likely to have a cascading effect, so that one bad event has a high probability of being followed by another. In such a world, good decision making is difficult and mistakes are easily made. All right, I'm going to stop reading from this. I encourage you to find John Malden and subscribe to his Thoughts from the Front Line. You'll get normally a weekly email, comes in I think on Saturdays. It's free. I encourage you to read it. Maybe you don't agree with him. He quotes from a lot of other people in his emails. He quotes from his own brain. He writes different stuff up. He talks about a lot of different topics that you don't normally hear about. He talks about energy. He talks about stock investing. He talks about real estate. He talks about different economic topics. But bringing it back to ourselves and bringing this to a close, because the video is getting long, look at your own economics, your own finances. I said this near the beginning. Set goals for yourself. All right. They don't just have to be economic goals. Set family goals, set living goals, set job goals, how you want to progress in your current workforce. Set those goals, but realize when it's the future and we look back on the 2020s, there's going to be some sort of major paradigm shift in the economies of the global economy. Okay. When that happens, there's always people that get hurt. There's always people that succeed. Make sure you do your best to be one of those people that succeed. You might be working a job right now where you're worried about getting laid off. Maybe you're one of those tech workers, okay? I can't tell you where to go get another job at. I know the job market still seems to be healthy, but I'm not participating in it, so I can't tell you where to work at, okay? I know companies, if we go in a recession, other companies will cut positions. The government may cut positions. You might be a police officer and get laid off. You might be in the military and get downsized. We don't know, okay? We don't know. If you have a spouse, I'll give you a personal thing. I had a spouse and we had 2 kids. There was a period of time when my money was real tight after I got out of the Navy, and I was living in Virginia. We had a baby, but we really needed more money. My wife took a part-time job in a YMCA in a playroom. She could take her child with her, the baby, and get paid. There was a period of time where she was making $100 a week. I could breathe, all right? That $100 a week helped. She moved from that job after a year or so into a preschool where she was working, I think, a 40-hour week, or 35 to 40 hours a week, but she was still making like minimum wage or slightly over. But then it was like, we're doing pretty good. All right. Plus, with little kids, the youngest one before he started school could go with her. When the kids got older and they were like in elementary school, they could get off the bus at her workplace and stay there till she got off work and came home. Because I was working, who knows what schedule I was working. Okay. All right, so you got to make adjustments in what you do. You got to make adjustments in your life. But in the midst of all this, you set those goals. You have savings goals. If you don't have nothing, you have a savings goal. Get $500, get $1,000, get $5,000, get $10,000, get $25,000. Once you get to that $25,000 to $50,000 mark, think about the possibility of moving into another asset such as real estate. My humble opinion, real estate is the fastest way to grow wealth. People, no matter what happens in the economic conditions of the country and the world, people always need a place to live. No matter if our currency changes in the future, people always need a place to live, okay? So think about that. We do not have another source of energy currently than fossil fuels. Yes, we have solar, yes, we have wind, yes, we have water power, but there's such a small percentage. Energy is another investment that we can all invest in that for this period of life is a good investment, I think. You can even invest in energy in the stock market if you want to stay in the stock market, okay? But you yourself, look at your own family, look at your own position, figure out your short-term goals, your medium goals, your long-term goals. If you can't think far enough ahead to get the long-term goals, focus on the short-term goals, and as you meet it, make another short-term goal and just keep building. I am doing the same thing myself. Sure, I mentioned before my channel, I have a net worth of about $2 million. Big deal. I can't live off that. I have to live off of cash flow. I have goals. I want what I want my positive monthly cash flow to be. I'm not there yet. I know what I got to do to get there. I have broken it down into smaller numbers. I'm progressing. So what I'm telling you to do, I'm doing myself. Okay? So that being said, we're at 25 minutes and some seconds. I'm going to wrap this video up. Let me know what you think. Do I know what I'm talking about, or am I just full of BS, rehashing what some economist and nobody knows who he is, or maybe you know who he is, what he says? What I'm trying to do, a lot of you don't subscribe to his email. I'm trying to help you to open your eyes up. The world's a changing. The times are changing. Bob Dylan, the times are changing. If you don't know the song, stream it on your streaming music device of choice. So with that being said, have a great day. Mazke's signing out.